Okay, so here we are on the daily time frame on EU. Going to review the last few days. Price obviously has been uh, going to the downside, but I'm still bullish because of this relative equal highs, and obviously the order flow is still bullish. And also, if you measure the current dealing range, price is now in. I use this low to that high, and we can see that there's a swing low accompanied with a mitigation block and some order blocks. So this is a very nice level on the 50% level. The reason that I'm using this low is because it took out the equal lows, and then this low started this whole range higher. And yes, you could also use this low because it took out this swing low right here, and then perhaps price that to get higher. I'm not using this low because this low right here did not take out any other swing low. So if you look at this low, there's this swing low pattern that took this low, took that one out. And this low right here did not take out any swing lows. So the first low that took out the swing low, that's this low. But that's not very standing out for me. So therefore I'm using this low. For me, this makes more sense. And also if you look now at the 50% level, look how price is reacting on that level. So for me, that kind of verifies to you the use of this, the use of that low. So yeah, if we look, or let's leave that one on actually, like this. If you look at Monday's price action, price bearish, I was anticipating maybe it will sweep this low and then reverses, but that didn't do it. Instead, price went lower and really traded into the 50% level. So let's see it intraday on the 1 hour, how that looks. So this is the first gray bar is always Asia, and this will then be New York, and show. Oh, this is Monday's trading. I see. Okay. Okay. So Monday immediately starts dropping for me. I think not really an entry there for me. Because I'm looking for opposing liquidity to get taken out and then started to move lower. But still we are on the 1 hour, so let's see later on the 15-minute. So price are dropping, consolidating, dropping, consolidating, dropping again. This looks to me for now as an original consolidation, and now we're expanding higher. We just had a what did we just have? Let's see, that was a big one. Today we had NFP. Today was NFP. Yeah. Yeah, so this week was bearish the whole week. So let's dive into the 15. So these are the days. So like I said, this is where London starts, 2 a.m. Price was just dropping, and it just, for me, it didn't give me an entry whatsoever. It didn't take out a high to get short from. So I sat on my hands and watched all this price action go. Yeah, because it's such, as you recall, on the daily, it was a very big down close candle like this. It was just melting that day. So whenever I see such a big candle, I'm anticipating a easier day the day after, because usually after a big day candle you can expect consolidation or a small retracement or an inside bar or whatever. So that was also what I was expecting on Tuesday. So going back to the 15, going back to Tuesday, I was very careful with my trades, because on Tuesday I noticed this low, which is the London low. London low gets taken out in New York, and during New York, what I did was I measured this move from this high to this low, and then look at 50%, and that's where I would have my target. And that is also the 50%. There was this fair value gap right there, something like this. 50 minutes fair value gap. So going into the 1 minute, like that. So what I noticed here, we can ignore this. Oh wait, I did forget to mention one important thing. I guess it was this low. So I also noticed there was a weekly swing low point, right? So there's lots of weekly swing low. Let's call it like that. Weekly swing low. Okay. Below, let's go to the 1 minute. 1 minute again. Go to Tuesday. And there we are. So actually, this day I took 2 trades. I come back to this one later. So this, let's make this one a little bit more obvious. I'll stand blue, maybe can I make it something bigger, maybe either something better. Okay. Okay. So I was watching this low, right? Because this is the weekly low, weekly swing low actually. So there's a lot of liquidity, which was taken out very aggressively. Then price trades higher, trades lower again, traces back, and here it was creating a failure swing. So I was looking for the 2022 model at somewhere in this area. I was anticipating a pullback because when such pool of liquidity gets taken, you can always expect some kind of pullback. So what happened? Serious price got taken, and now here, in this area here, right here, there, ICT also uses this nice light bulb. It's cool. There is our first break in market structure, right? Because you have this swing low here. And maybe you could argue this on first was the first, but there was no really displacement in this leg. This displacement lower, then we get here, and now we see only green candles with leaving fair value gaps and also a propulsion block. So for me, this was a light bulb moment. Okay, we have a break, a shift in market structure. Price trades higher, creates equal lows, price trades back to it. And here we have this propulsion block accompanied by this little fair value gap. So it overshoots it a little bit. I think ICT calls it a little mohawk, which is allowed because overall we are still within this order block, propulsion block. Why is the propulsion block? Because it is nesting or sitting inside this order block. Or maybe you have to lose those, below those, yeah. Look how the bodies are respecting the mean threshold. So that's all for me the first sign. Then price respects this area, and we get displacement candles going up, leaving this fair value gap right here. So that was my entry. So I went long somewhere in this, put my stop very safe right here. Why did I put it like there? Because that for me is my intermediate term low, because we have a low here, we have low here, a low here. So that makes that my intermediate term low. So I want to put my stop there and put it safe. Because price might as well trade back, take out this low again, and then trade higher. So my target again was that 50% area of this leg that traded lower. So in this case, from this high, made this high, but somewhere here, 50% was something around here, and I believe I did it. I did it a bit higher because there's a 15 minutes of value gap resting over there somewhere. So let's forget this one for clarity. Let's clean this all up. Yeah, so I traded to here because this is the 15-minute lag, and I measured it, and look how funny the 50% matches exactly the weekly level, the weekly swing low point. So the first, this fair value gap is resting, and obviously it doesn't give me the nice RR that I want, so I traded it to the low of the fair value gap, because overall price is still bearish, right? So you have to remember this is a counter trend trade, so be very careful with your targets and stop loss, etc. But still, this gave me indeed a nice 1 to 2. So as you can see, the trade played out pretty well. Like that's over there. So that was my first trade that I took that day. It's my first trade of the week. It was on Tuesday. Next, there was a very similar trade. So we have this low now. Let's mark the low out. So this is the low of London, right? So this was the London low, which is also a big liquidity area. So then during, I didn't want to go short actually, because I didn't know really if it would take out London low again, or maybe it wanted to go higher. Because for me, the draw liquidity was already met in the form of this weekly swing low. So I had no idea whether price would find support on this low and then trades higher again, or maybe wants to go lower. I don't know. So I just sat on my hands and waited for price to show its hand. So price decided to trade lower again to take out London low. So I was watching again for the same signatures, because now it took that low again. As you can see, I still have my light bulb on. Again, price trades lower with speed, then trades higher again with speed, and trade very clearly it breaks this high with speed. So this is a little bit more clear. So for me, that was my signal. It also left a small fair value gap right here. So that was my long position right here. Put my stop loss below the lowest point. As you can see, it always wicked me out. And then I did exactly the same thing as I did in the first trade. So what I did was I measured this high to this low, find 50%, which was around here. So I think it was something like this. I got very nice that wick. Yeah, there we go. So it's actually, it was over here, something like this, just below the fair value gap. Because this was the bigger fair value gap right here. And I wanted to play safe and place my TP below the fair value gap, because often what you can see is that it creates a high just below the fair value gap, then retraces and takes it out later, or it doesn't take it out at all, because overall we are still in a bearish market. We are still, also this one is a counter trend trade. So anyway, as you can see, I measured it again from this high to this low. There is the PD array, namely a bearish value gap resting in this area. So my target would be there. It was a nice 1 to 4 in this case. Yeah, it was a very nice trade, big trade. And as you can see, it went pretty fast. So I like that also. Yeah. So those were those trades, and my explanation of the price action there. Yeah, it was a good trade. So that was Tuesday. Now, let's go on to Wednesday. Wednesday I did not trade. Wednesday is usually a day I don't trade because of personal reasons. But yeah, let's see. Obviously, price was dropping. So here's is London session. I'm not sure if I would have taken this trade. Price was in a very unclear situation. Obviously, it was going sideways. And overall, I would say price was in this bearish dealing range because this takes out this high, takes out this low. So I would expect, yeah, so it's, if I see now, price was trading into this fair value gap. Look how nice it's respecting the bodies in very deep discount, premium, I'm sorry, very premium price. So that was in Asia. Asia runs higher, take out these equal highs, accumulating orders, then moves lower, takes out this low, shallow, then trades back into this value gap again, and then it just melts. And also you can see that during London price was just consolidating, and only lunch started the move, and then New York really finishes the move. So I'm not sure. Yeah, obviously there's this high that got taken out. Here you got speed to the downside. So maybe this was your first hint that now this low was broken. Price retraces back. And if you look at market structure, I'm going to focus on that a bit more. We have swing high here, swing high there, swing high over here. This makes this an intermediate term high and also respecting this fair value gap. So that's pretty interesting. So that was maybe a first sign, and then we just not really displacing, but they are leaving fair value gaps, and obviously order flow is bearish, also breaking this low with this wick. So that all happened before London open. Then we got the Judas swing, obviously. Let's delete this. Let's see, this one too. And this can now go, look, I'll see how nice price is reacting to this. I'm not using it, but I just notice how nice it reacts to the previous week low swing point. So looking at the charts like this, obviously we have this very big move to the downside, right? This move, and there is this fake trend line established. But anyways, yeah, in terms of market structure, I would say short-term high, intermediate term high, an intermediate term high respecting very nicely this fair value gap. So this is something we could all see because this happened in Asia. So when we wake up, at least I wake up, and I want to trade London, I can see that it is respecting these areas, and that is this signature. So therefore, I see this fair value gap now. So maybe let's see how it behaves. Behaves pretty nice. It wicks to the damage, and bodies tell the story. And there's also this fair value order block, because this order block took out some equal highs, and it was creating fair value gaps. So that makes it a strong order block. So in this area, we can look for shorts then, I guess. So let's see if we find a nice setup there. I haven't looked for it yet. So this is my first time watching the 1 minute on Wednesday. So this is the 15-minute time frame. This is London session. So this is at the Judas swing on the protection area move. Here's the upper fair value gap, trades lower, and then what we want to see is a market structure shift. It takes it out again, and now we see on bearish reject, swing low. It's not really broken with speed. No. This low gets broken with speed after working this fair value gap, and this here is the speed. So there's the short. I would put my stop now above this, or maybe it's something like this. maybe above the green candle, but probably something like this. Also including this order block, propulsion block rather. This is the order block, this is the propulsion block. And my target, since we are bearish, at least I would target this low, which already is a nice 1 to 2. And yeah, we would, yeah, that would be a good trade. We have some draw, would have some drawdown in here, but it's just working this bigger value gap. And in the end, that would be a nice target right there. That's a target using on the 1 minute, but usually I pick my targets from the higher time frame. So that then I would target this low because it's creating equal lows with that low. And I guess maybe, I'm not sure, but since price is overall bearish, price is respecting it, I would take in partials and left a runner for this low. So that would be a 1 to 5, and that would also be a very nice, trade. So that is probably how I would have traded Wednesday. Next, let's see in the daily chart how Wednesday was looking. Now Wednesday was a very big candle, trading below these lows. So since it's a daily swing low, I would anticipate a pullback maybe. So going on to Thursday, let's go to the 1 hour. How the 1 hour is looking. If we open up Thursday, then this price would look like this. So we are very deep in Thursday. We have Wednesday low resting right there. So this would be Wednesday's low during Thursday. Wednesday low, like so. Yeah, so we have this wicking into this bearish value gap and the push lower, but not a very strong push lower. So let's see on Thursday what happened. So if we look at here is where, yeah, so this is Asia. Asia is making a pullback, then trades higher, and this is the start of London. So this is what you get. This is how you start here inside the value gap. So from this high to that low, roughly taken, yeah, this still falls in this value gap still valid. And of course there is some up close candles on the high time frame. This would be an order block. So I would be watching this, I guess, still bearish. High time frame is still bearish. So watching in the highs, I think it's okay to look for shorts. Look how price is touching this low right there. It's very nice to see. Going to the 1 minute. Since Wednesday, Thursday, I mean, yeah, Thursday. So yeah, this is a signature that I like very much. So this is London, trades higher. We have this very nice low that gets broken now. Do we have value gaps? Yes, we have. We have one here. So I probably would have used the lower one. So I would have taken this trade, stop loss above there, and target. I think I would have targeted the Wednesday low. I think I'm not sure what I would have targeted. Let me see in the 15-minute. So maybe I think this only the lag. That lag is already a 1 to 2, so that would be very nice. So I think I would have only traded it something like this, and maybe, I'm not sure what I would have done, but this I'm sure, but maybe I would have taken it to this low right here. Or I'm not sure I would do this. I think I would go for this. I like to place my my take profits very safely. I use the bodies, I don't use the wicks. So maybe I would do something like this for a 1 to 6. So that's probably what I would have done on Thursday. During London session, that was the London move and the lunch move. Then price traded all the way back up into these highs. Did it take out the highs? No, it created equal highs. It was creating equal highs. Do I see maybe these highs are taken out right here, right? So we see some highs there in this area. So let's see on the 1 minute if there is another entry, maybe another trade, in case we miss London. That's very nice how it looks like here. I like it. Why? Because we have these equal highs and also this, no, not this high, but we do look at the bodies. These bodies are lower than these bodies. So we took out the most of the volume. So these are relatively equal highs for me. Above these equal highs, we were consolidating. So we are accumulating orders above equal highs, and then we see a breakdown to the downside. And this is the low for me that was broken right here. Then we see if a value gap here and if a value gap right here. So I would have put my position here, stop loss above the highs, and then I guess it would be my target for something like this. So 1 to 4, and we get that pretty quickly. And maybe if we use a higher time frame, yeah, those are equal lows, so I would target those. I would target those equal lows resting right here. I don't the body in this case because we have now very nice equal lows. So I would target those lows. And maybe since we have a failure swing created equal highs, I would target this right here. But anyways, this is a very nice trade already. 1 to 4. That's enough for me. Yeah. So then we can also take the trade reversed because TP was hit, price stays lower, lower, lower. And then we have this low resting right there. This is a 15-minute low. All right. So going back to the 1 minute. This low gets taken out right here. And after we take out the low, we see some consolidation, which usually means we are accumulating orders. So if you trade the London close, then as you can see, we really displaced higher. There are multiple lows here, multiple highs that got broken with speed. So I probably would have somewhere, this is the first of the last value gap that was created. I'm not sure I would have done this long because of the very big stop loss that I would have. Well, it's only 30 pips, but maybe I would have waited. Maybe I would have taken it depending on my target. And my target would be at least this high, I think, or maybe here, those equal highs. But those are just 1 minute targets. I'd like to look for, yeah, I like the rejection blocks right here. This is the reason, this exactly right here, what happens here. This is the reason why I always use the bodies as my target, because otherwise I would have targeted this high right here and that high would not get taken out. So therefore using the bodies as my target, and now our target would have hit, and now we have a 1 to 2. So yeah, so I'm fine then in that case with my 13 pips stop loss, a little bit of drawdown, and there it goes pretty quickly to my to the target. So that's a nice trade here. Then we go for today's price action. So if you look at the daily time frame, how yesterday was closed, we can see it did not take out Wednesday's low, right? We saw that earlier. Instead, it was an inside bar. So therefore, I was expecting that today would take out yesterday and the day before's low. So let's mark that out. Something like this. These are the lows. Go to the 1 hour. I still have Wednesday's low on. So whatever. Yeah, I still have this one on. So let's drag it across. The 1 hour is pretty clear that we are consolidating. We are in extremely um, discount. If you look at this move from Monday till Friday, price has only been going lower and lower. And also remember that if you go to this time frame, I moved it a bit around. All right, so when using this low to this high, price now took out this liquidity and is now hitting discount PDR ratio in a bullish market. The other thing to be aware of is today is Friday. Since the weekly has predominantly going lower, I'm expecting a TGIF for price to retrace back into the range. So today I was looking for uh, for longs, for bullish price action. So with that out of the way, we enter on Friday. So we have this consolidation all the time. And when I came to the charts, was I started London Open, I'm coming up my charts, I saw this liquidity was taken right here, liquidity was taken right there. So we have a bullish dealing range. So I marked out, I believe, something like this, or maybe I did it on a 15-minute time frame. Yeah, so I saw price was climbing higher, price was retracing. So I'll go back to the 1 minute. Like I said, I was bullish today. But in the end, in hindsight, this turned out to be a beautiful, beautiful sell. This is the day where I went wrong. This is the 1 hour for value gap, right? So I saw this low creating. I'm thinking that's very nice. Lows creating just above a bullish fair value gap where you want to long from is nice to see. So obviously for me, I went long here because price was trading below all these lows, taking liquidity, and here it gathered speed. There was a fair value gap resting right there. So I took my long, pushed it, put it right there below this low, and I was targeting at least this high and higher. But as you can see, the moment that I got in, I just got stopped out very quickly. So then I just let price go because I had no clue what price wanted to do next. Because my next thought was if we measure this dealing range, I was going long in a premium. So therefore I was looking at this fair value gap right here. As you can see, price respected it a few times. So let's go to the 1 minute. Respect it, respect it, respect it. Then by the time we got there, I also noticed that if you remove all this like this, what I noticed, what I saw were all these equal lows resting right there. And that's a very nice pool of liquidity. And also we didn't take out Wednesday's low. So I decided to not to take the trade and let's see, let's see what price would do because price didn't take out as low yesterday. So I was really curious about what price would do. Price was also have printed these equal lows just above Wednesday's low. So I sat on my hands and eventually here is where it's during lunch, but I didn't care today because there is this is what happens in the 1 minute. This is the this Wednesday low, right? Can I extend to the right? Yes, I can. Oh. Nah, whatever. This Wednesday is low. 2 pixels and then make it blue, right? So Wednesday's low got taken out, as you can see with speed. Then I was watching this, and to be honest, I didn't really help to my model because yeah, maybe it's experience, I'm not sure, but what I noticed here was obviously we had speed. This was displacement. There was value gaps were being created here to here. Also, we had a change in state of delivery. We already were very swing to the downside, and next we created this value gap. So I took a chance by going long in here. So put my stop in here, and since I was aware that it was very risky what I was doing, I had my stop right there. So for a 1 to 3, I get in the end I get a very nice trade. So the price traded higher until this dotted line. It is the opening price of today, I believe. Yeah. It's the opening price of and this is the monthly open. Today is the first day of the month, so this is the monthly open. So going back to the 1 minute. So today was NFP. Let me check. It was NFP, right? Yeah, NFP today. So just before NFP, I entered my trade because I was not really anticipating that it would take out this low. I saw this happening. I saw that it took out this low right here. And there's this bigger order block. Took out this low right here, and then we have here. Since I had success here, I thought to be smart, and I took a trade after I saw this, I believe, something right there. So I put my trade maybe on this candle right here. And here's the kicker, I did not use a stop loss. Right before NFP, I did not set a stop loss. That was a very big gamble, very big risk. But for me, reason for it was price. I was predominantly bullish. I was participating in TGIF, and also usually NFP is a two-sided event, because often what you'll see is that it takes buy side, takes sell side, and then it chooses a direction. So I was thinking like, okay, if it goes against me, imagine it goes up first. If it goes up first, then I get out pretty quickly. And if it would go down first and it then trades up, I would then enter, take my loss there. So this was a trade that I should not have taken, but yeah, somehow I did. And in this case, yeah, maybe I got lucky, maybe it's a bit of skill, I'm not sure, but it turned out to be a very nice trade, because I thought when price has taken out this weekly, because it's the lowest point of the week, right? So there's lots of stop losses here, also lots of liquidity here. So when it takes it out, it will probably go to, I believe I used these highs right there. So that was for 1 to 2. Not really 1 to 2. It was just this was just pips. So just for 44.5 pips. So yeah, that worked out in my favor today. Yeah, I'm not really proud of it or something. I'm just happy that it was turned out to be a loss. But yeah, I don't need to do this this kind of trading. So next, what I noticed was that if I go to the 4-hour, there was this high resting right here, like so, this high. Going back to the 1 minute, I was watching that high, how price would react. Because yeah, price had to retrace sometime. So price slowed it down over here. Then it made it a big push above that 4-hour high, and then it traded down very strongly. I noticed here, where's the light bulb, right there, point. We had a shift in market structure. We created a value gap right there, but I saw price was respecting that high. So I decided to go short based on this candle, respecting that high. So not completely following my model, but anyways, I did something like this. And I was a bit anticipating a bit of pullback to this low right here. Why that low? Because if I measure where this all kind of stagnated, went slower, this is half, but that was not enough. So yeah, based kind of, this was really maybe that was it. Yeah, that was it. Yeah, this was the low that started this last push. So therefore I was targeting this. I was monitoring it very closely. Because as soon as I saw this low being created, and I look to the left, I see this order block which take out this low and create a value gap. So this is on the 1 minute a strong order block. And look what price did. It was respecting, closing in the upper half. Then it went higher. But I wanted to see speed from this candle on. This candle on did not give me what I wanted to see. So I closed the trade somewhere here, I guess. So in the end, it was a 1207. And I'm glad in hindsight that I did, because as you can see, it would have stopped me out, and price is now only going sideways. I think price won't make any move today for the rest of the day, because all the energy, all the big movements are already done for today. I think this was the energy for today. This was the move of the day. And usually when you got the move of the day, you got very lethargic price action. What else can I see here? Well, I notice here now there's a swing high to the left, swing high to the right, so making this an intermediate term high on the 1 minute. So let's see in the 15 minutes. Not yet, it's only a swing. This is a swing high. This is not, it's just a high. But I think there will be another high here, and then this is the intermediate term high. But anyways, yeah, maybe we set the stage for next week. I'm not sure. To be honest, I always find it difficult to I say how to trade such big movements. Is it going to consolidate and it pushes higher and they're respecting it? That's easy. This is going to retrace. We have a huge value gap sitting right there, a very big one. So maybe it's wise to split it up in quadrants, to use quadrants in this big fair value gap and see how each quadrant is reacted to it. But for now, the current dealing range on the 4-hour maybe. Also look at this right here. Price is up, price gets lower. Yeah, we'll have to see for next week. But anyways, this week gave a very nice opportunities. So yeah, let's see what next week will give us. Thanks.